Hello everyone, welcome to EduTap. So today we are going to have our another part of the mega revision series with respect to the company law, right? So now in today's class, we are going to discuss 25 MCQs with respect to the subject company law. And the PDF of this session you are going to get in the in the Telegram channel. So if you haven't joined the Telegram channel, you should do that to get the PDF of the particular session, right? Okay, hello everyone, hello. And first of all, just let me know in the chat section, everyone, ki my voice is clear to you. Good evening, everyone. And plus my video is also absolutely fine to everyone. Just let me know in the chat section. Then we will move ahead with our first question of the day. So now, first question is, good evening everyone. So first question is, under which of the following condition the person can be appointed as an auditor? So now this question is with respect to the auditor and auditors, right? So we have different chapters in the companies law, or you can say Companies Act 2013. So from there it is being asked to you that person is an officer or employee of the company. Person is an auditor in 21 small companies. So the question is asking to you, which can be appointed as the auditor? Person is an officer or employee of the company. Person is an auditor in 21 small companies. Person has been convicted by court in last 5 years. A person whose relative holds securities of 1.55 lakh in the company. So let me check the chat section. And yes, everyone is correct here. And I'm really good to see this ki from the very first question you all are correct here. So person who is the auditor in 21 small company will be able to be appointed as the auditor. Why? Because in the limit of the companies you don't include the small companies. So let's just try to get the understanding of the underlying provision in detail in our next slide, right? Then you will have the good idea of this answer. Now we are going to talk about the related section, that is section 141 subsection 123, that talks about the eligibility, qualification and the disqualification, right? Now, and in addition to that, we have also company audit and auditor rules 2014. So by combining the rules of both of these, we are going to talk about which who are the persons who are not allowed to be appointed as the auditor, right? So following shall not be appointed as the auditor. First one, an officer or employee of the company, or anyone who is further employee of any officer or employee of the company. So basically it is saying ki whoever is the employee or officer of the company, they can't be appointed as the auditor. And that is very logical because that will give rise to the conflict of interest, right? Second is a person who is the partner in the company. Third one is a person or a firm who has business relationship with the company, right? So that firm, see, as the auditor, we can also appoint a firm, a partnership firm or a limited liability. A partnership also we can appoint as the auditor of our company. But if a person or a firm has the business relationship, then we can't appoint it. A person whose relative is a director or KMP, that is key managerial personnel in the company, right? A person who is in full-time employment in some other company. Now, what is this point is talking about? See, it is saying कि if any chartered accountant or chartered accountant firm, see basically chartered accountant or chartered accountancy firm can be appointed as the auditor. Okay, you know that. But if that CA is in the full-time employment in any of the company, in any other company, then also he will not be allowed to be appointed as the auditor, right? He should be in full-time practice, then only he can be appointed, right? Now, if a person or a partner of a firm is already holding appointment of more than 20 companies. Now, this is also the limit. If the auditor is having the audit of more than 20 companies, then he can't be appointed in any other company. Now, the limit of this 20 company is not going to include your 1% companies and small companies and the private companies having the paid up share capital less than 100 crore rupees. So all these provisions you have to remember from the examination point of view, right? Okay, now if any person has been convicted by the court or by the tribunal as well for a fraud or any other offense, but 10 years have not been passed from his conviction, So after 10 years, he might be appointed as the auditor. But if 10 years has not been passed, he won't be appointed. So see, in the question, we had the C option. Person has been convicted by the court in last 5 years. So when in last 5 years, he has been convicted, he won't be appointed as the auditor, right? Next point. So you have to remember each and every point for the disqualification of the auditor. A person, because we have discussed only one point, but the question could be asked from anywhere throughout this slide. A person who directly or indirectly renders any service referred to in section 144. So basically in section 144 there are different services and they are listed, and it has been provided to you that the auditor is not going to provide these services to the company, right? So whatever services are listed there, if any person is providing those services, he can't be the auditor of that company, right? Now the question could be asked from 9th point in the examination. A person who himself or his relative or partner is holding security, or we can say has any interest in other company, has any interest or is holding any securities in other company, right? So that person can't be appointed as the auditor of the company. But there is some exception given in this case. Please remember this arrow mark. It says exception is given to the relative. If suppose the chartered accountant's relative holds the securities not more than 1 lakh rupees. See, understand this thing. If the relative of the chartered accountant is holding the securities equal to or less than 1 lakh rupees, then the chartered accountant can be appointed as the auditor of the firm, otherwise not. If the relative is holding more than 1 lakh rupees, then the chartered accountant can't be appointed as the auditor of the company, right? And plus this person himself or his relative or his partner is indebted to the company or owes more than 5 lakh to the company. Now you have to remember this point as well. 5 lakh is if he is indebted for 5 lakh or more than 5 lakh, in fact more than 5 lakh to the company, then also he won't be appointed, right? Now, or has given a guarantee of more than 1 lakh. So for a third person, if any third person has taken the loan from the company, but the CA or his relative or partner is basically giving the guarantee up to rupees 1 lakh, right? Then he can be appointed. But if he has given the guarantee of more than 1 lakh rupees, then he won't be appointed as the auditor of the company, right? So you have to remember all these points. Clear? Now, next question, and let me check who will be correct here in this question. Frauds of value greater than or equal to are reported to the central government by auditors. So if the frauds are more than 50 lakh rupees, or frauds are more than 1 crore rupees, or frauds are equal to or more than 2 crore rupees, or it should be 5 crore or more. So frauds of value should be reported to the central government. But what is the amount, I want to ask you? Is it 50 lakh, 1 crore or 2 crore? So yes, everyone is correct here. That is really, really good. That is your 1 crore is the answer. Okay, Jyoti is saying option number 2, please explain. And Jyoti is saying, I don't understand. Achha, the first question, option number 2. Person is an auditor in 21 small companies. That is very easy, na? Because the limit of 20 applies to the it doesn't apply to the small company. So even if he is auditor in 21 small companies, he can be appointed in next company as well. That is the option, right? Okay. So the answer of this question, second question, was option number B, right? Everyone is correct here. Okay. Now let's talk about the detail of this particular section, that is 143 section, right? It talks about the powers and duties of the auditor and auditing standards. So it says that the auditor has to report the frauds, but whom he is going to report, that is going to be discussed in this section 143 subsection 12. So it says if the fraud is greater than or equal to 1 crore rupees, then it will be reported to the central government. Otherwise, if the frauds are less than 1 crore, so that will be reported to the audit committee. So you should be remembering these data, right? And if there is no audit committee, obviously he is going to report it to the board of directors. Clear? Okay. Now, third question of the day. that says a company is dealing in the category A product such as pharma and telecom. So basically we have two types of categories, category A and category B. We call them, basically I'll write it here, category A is regulated category. Regulated category means these products or services are regulated by the companies, like we have the pharma, telecom, electricity generation companies. So these are regulated industries, right? Because why they are regulated industries? Because they have this social impact. The logic is that, right? So we in the law terms we call them category A, regulated entities or industries, you can call it, okay, such as pharma and telecom. Then for company to come under the ambit of conducting a mandatory cost audit, so few companies, you should be aware of that fact, ki some companies need to have the cost audit as well. So in this question it is only asking you ki then for these type of companies in the category A, if they have to become under the mandatory cost audit, its annual turnover shall be dash crores or more, and aggregate turnover of the individual product whose cost has to be shown to the government, right? So what will be that basically amount in the first blank and in the second blank? So let me check the chart section. So first of all, let me read the options. 50 crores, 25 crores, 100 crores, 50 crores, 100 crores, 25 crores, 50 crores and 50 crores. So let me check the chart section. And yes, so I have got few answers, but not every one of you is correct. The answer is 50 and 25 because we are talking about right now A category. So I'll explain this thing to you. So previously it was something else, but why in the third question A is the answer, I'll just let you know. So basically section 148 talks about it. And now listen to me very carefully. We have talked about the category A now. So for the items under category A, they need to conduct cost audit if, now you have to remember these points, right? The overall turnover of the company from its products and services during the immediately preceding financial year is greater than or equal to 50 crores. So 50 crores, we have the answer A and D. C and D will be eliminated automatically, right? We are talking about turnover. Now, then we have the aggregate turnover of the individual product. Now we are talking about individual product or services for which cost records needs to be maintained. That will be greater than or equal to 25 crores. So see, we have the option number A, 50 crores and 25 crores. But in the examination, it is not necessary that you will be asked only from this point. You could be asked from the category B as well. So what is the classification criteria for category B? Let's understand that. So if the annual turnover of the company from all its product and services during the immediately preceding financial year is greater than or equal to 100 crores. So now the annual turnover limit is greater than or equal to 100 crores in case of non-regulated entities or items or industries, right? So please understand, in the examination it might give you like this, ki a company is dealing in regulated items or regulated products. Instead of category A, they can ask you that, or non-regulated products. So category B is non-regulated, category A is regulated. So for non-regulated, the aggregate turnover of the individual product should be greater than or equal to 35 crores, for which separate cost records needs to be maintained. Clear enough? All the data clear? Okay. Jyoti is saying no one is correct. Yeah. In this question, no one was correct, because this was I can say a higher difficulty level question, but you have to remember these facts, right? Okay. So if the examiner wants to give you the question from in depth, in a very depth manner, then they can ask you this question, right? Now, question number 4 says a company has 3 directors and company is public company with a turnover of 150 crores. Now listen to me very carefully, again a trick question. A company has 3 directors, okay, and a company is a public company with a turnover of 150 crores. What shall be the number of independent directors in the company? So first of all, it's a public company and turnover is also given to you, but it is saying it has 3 directors. So what should be the number of independent directors? So the clause says 1/3. Minimum of 1/3 director should be the independent director, but that is the half clause. I'm not going to talk about the other part of it. First, you give me the answer, then I'll explain this question. So answer would be 1, 2, 3, or 4. Let me check the chat section. Okay, now in this question, everyone is correct. Yeah, okay. This question you have correctly given me the answer. Everyone has, not everyone. Okay, 1 or 2 are incorrect. Other than that, everyone is correct. Okay, so the clause says कि independent director, the number of independent directors should be 1/3 of the directors, or 2, whichever is higher. This was the other part. So 1/3 or 2, whichever is the higher. So the higher amount is 2 here, because if you do 1/3 of 3, that will be 1, right? So 1 will not be the answer here. The answer will be 2. Okay, let's talk about this in detail. That is section 149, and we have appointment and qualification of director rules 2014 as well. Now let's talk about this in detail. We have to read out each and every minute point as well. Now each company shall have at least 1/3 of its director as independent directors, right? Note is also there कि if the fraction is coming out to be suppose 1.2, so it will be rounded off to 2 directors, or suppose the number is coming out to be 3.1, so it will be rounded off to 4 directors, right? And it is saying, and now it says public companies, as per the latest audited financial statements, if they have paid up capital of 10 crores or turnover of 100 crores or outstanding loans, debentures and deposit of greater than or equal to 50 crores. So if these 3 conditions are there, right? So this also needs to have needs to appoint the independent directors. And see, this condition that we have talked about in the question, and shall have at least 2 independent directors. So if the number is coming out to be 1, so you will take 2 independent directors, right? Okay. Now, and one more thing, कि these companies, see, in this company we are talking about the unlisted company, unlisted public companies. This is given for unlisted public companies, right? And this is for listed public company. Listed public company should have at least 1/3. Plus, if you have any unlisted public company but that satisfies this criteria, they can also they must also appoint the independent directors, correct? Okay, everyone is correct here. Okay. Now let's talk about question number 5th. Which of the following component shall not be a part of independent directors remuneration? So you have to tell me which of the following is not the part. So you select which are the part of the director's remuneration. Okay, Nachiketa is asking something. In case of listed companies, so public and listed companies different. See, और क्या? Nachiketa, public company can be listed and unlisted as well, na? Public company can be listed in the stock exchange, and it might happen that it is not listed in the stock exchange. So when it is listed, it will be called listed public company. And if it is not listed in the stock exchange, but it is public, then you will call it unlisted public company. So public companies has 2 types, right? Acha, give me the answer of 5th question now, everyone. Fee, it is included. Commission based in the profits, yes, it is included. Reimbursement for attending meetings, yes, it is also included. But stock option, no, it is not included. So let me check the chat section, and I can see everyone is correct again. Very good, everyone, you all are very intelligent. Okay, so fees included. Commission based on profit are also included. Reimbursement for attending meetings are also included. Let's talk about this in detail as well. Section is 149, though you don't have to remember the section, just remember the clauses. So these are the three aspect, or 3 you can say points that will be included in the reimbursement, in the remuneration: fees, reimbursement of expense for participation, and profit related to commission as approved by the board. But this section does not apply to the section 8 and the IFSC public company. This also you have to remember, right? So easy enough. This was the easy question. Okay, let's move ahead. Even if you don't know this clause here, you could have intelligently guessed the answer here, right? This was the easy question. Now question number 6 says the independent directors of the company shall hold at least dash meetings in a financial year without the attendance of non-independent directors and members of the management. Now you have to tell me the independent directors, how many meetings they should minimum hold in a financial year? 1, 2, 3, 4, excluding the without attendance of the non-independent directors and excluding the members of the management. Only independent directors, how many meetings they should at least hold? Okay, let me check the chat section, then I'll explain this question to you. And yes, again, not everyone, but most of you are correct here. That will be 1, right? I think only 1 or 2 are incorrect, otherwise everyone is correct. And even if you are incorrect, that doesn't matter, because this class is we are discussing these clauses so that you remember it while we are in the process. You can remember it. That's why we are doing this. Okay. Now, what about the detailed section? Section is 149. Subsection 8 says separate meetings should be held by the independent directors, right? And it says independent directors of the company shall hold at least 1 meeting in a financial year, but without the attendance of the non-independent directors and the member. But why we are doing it? Why these independent directors are having the meeting with themselves? So that they can review the performance of the non-independent directors and the board as well, right? And review the performance of the chairperson of the company as well. And they also assess the quality, quantity and timeliness of the flow of information between the company management. See, company management are basically your key managerial position, key managerial personnel as well as your directors. So basically company is getting managed by these personnel, right? But in actual, who are the owners of the company? They are the shareholders, isn't it? Owners are someone else. Owners are sitting somewhere else, but the company is being managed by the directors, right? So that's why, to check the quality and to check these board of directors are working properly and in favor and in benefit of the shareholders or not, independent directors conduct their own meeting to assess all the performance, to assess the quality, quantity and timeliness of the flow of information, to review the performance, and in fact to review the performance of chairperson as well. Got the logic why we are doing it? Okay. Now 7th question. An independent directors can hold office for a maximum of dash consecutive terms, and post the completion of these maximum number of consecutive terms, the independent directors needs to serve a cooling period of dash years before he again become eligible for the post. Now listen to me, look at this question very carefully. I'm not talking about the time period of a single term. I'm asking you, the independent director can hold office for a maximum of how many consecutive terms? I'm not asking you the time period of a single term. I'm asking you for how many terms he can hold the office. And what is the cooling period? Cooling period means the gap between next appointment. So for the consecutive, how many terms he can hold the office? So options are 2 years, 2 years, and 2 terms and 2 years, 2 terms and 3 years, and 3 years, 2 terms, and 3 terms, 5 years. So first one is talking about terms and second one is talking about years. So now let me check the chat section who all of you are correct. Okay, someone is saying no idea. Okay, yeah, I've got the answers and each one of you is correct. Yeah, so that will be 2 terms. Maximum consecutive terms would be 2, and after that you should have the cooling period of 3 years, right? Okay, now let's talk about this section in detail. So company to have the board of directors and independent directors term, let's talk about them. So the independent directors shall hold the office for a term up to 5 consecutive years. Now they are talking about the 5 consecutive year. One term can be of basically maximum of 5 consecutive years. Now this is talking about the year in a single term, but in the question it was asking you how many consecutive terms. So the question is different, so you have to look at the question very carefully, right? Okay, now this is the maximum of single term. Now the independent director can hold the office or shall hold the office for the maximum of 2 consecutive terms, not more than that. And after that he has to resign, and there should be a cooling period of 3 years. And after this 3 years has been ended, then he can be reappointed as the independent directors, right? Now independent directors shall be eligible for reappointment after first term on passing a special resolution by the company. This is also important, right? So after the expiry of first term, a special resolution needs to be passed, then he will be appointed for the next term, right? Okay, next question, that is 8th question, and this is the important question. Small shareholders means a shareholder holding shares of nominal value, or you can say face value, of not more than dash rupees. Easy question, but the important one. So how much worth of shares do you hold? And then you will be called the small shareholders. Small shareholder, you will be called as the small shareholder. So if you are holding shares less than or equal to 10,000 worth of rupees, or less than or equal to 20,000 worth, and less than or equal to 50,000 rupees, and less than or equal to 1 lakh rupees. So let me check the chart section, then I'll discuss with you the detailed part of the underlying clause or provision, right? So I think I have got the correct answer from everyone. Yeah, everyone is correct. That is option number B, 20,000 rupees. So if the shareholder is having the shares worth rupees 20,000, then he will be called the small shareholders, and everyone is correct here in the 8th question, and I am really glad to see this. Okay, so a listed company may have one director elected by such small shareholders. Now what are these small shareholders? Small shareholders means the shareholder holding shares of not more than 20,000 rupees. So if they are having the shares of 20,000 rupees, then they will be called the small shareholders, but it should not go beyond, or it should not exceed 20,000 rupees, right? Question number 9th we have is, if a company has 80,000 small shareholders in total, then how many minimum number of small shareholders shall be required to serve a notice to appoint the small shareholders director? So we have, in the previous slide we have seen that small shareholders can appoint the small shareholders director, but suppose the company has 80,000 small shareholders. So by minimum of how many small shareholders we should receive the notice so that we can appoint it? So we need to have the notice from 10,000 shareholders, 8,000, 5,000 or 1,000. Let me check the chart section and I can see. Okay, so not everyone is correct here, but yeah, few of you are correct. That is 1,000, and we will see how it is 1,000. So not everyone is correct here, but don't worry, even if you are correct. Acha, one person has given me first B, then D. You are confused, I think. Okay, now see what happens here. Now let's talk about the underlying provision here, then you will have the understanding why the answer is option number D. See, first you are going to calculate 1/10, that is 10%. That is 10%, right? So it says a listed company may, upon notice of not less than 1,000 small shareholders or 10% of the total number of such shareholders, whichever is lower. So in this question, 10% is your 8,000. So that's why some people have, some students have given me the answer of B. But the thing is, you have to read out all other options as well, right? And here it is 1,000. So the less is 1,000. So they are required to get the notice from only 1,000 shareholders, 1,000 small shareholders. Got the logic? Why it is like that? Yeah. Okay. And now let's read out some other important points. The small shareholders intending to propose the person as a candidate for the post of small shareholders director shall leave the notice of their intention with the company at least 14 days before the meeting. Now, this also can be asked in the examination. Ki if any small shareholders wants to basically propose a person for the small shareholders director, he should leave the note or notice at least 14 days, at least 14 days before the meeting is going to be held, right? Now it should contain all the name, address. This is not important, but 15 days are important, right? Okay, next question. the application for the allotment of DIN, that DIN is director identification number, right, needs to be made to which entity? This is very easy question, huh? So when you basically apply for DIN, that is director identification number, so to which entity you apply that? To SEBI, to Ministry of Corporate Affairs, no, not Ministry of Corporate Affairs, Ministry of Finance, and then we have Income Tax Department, then we have the Ministry of Corporate Affairs. So which department you file your DIN form? This is easy question. Yeah, everyone is correct. Okay, that's really good. Okay, good. So the answer is, yeah, everyone is correct. Ministry of Corporate Affairs. Okay. Let's move to the next question. Before moving to the next question, let's talk about some few additional points with regard to this DIN application, right? So the director has to basically apply for this DIN, and he's going to do that in DIR 3, and which is basically available in the MCA website, that is Ministry of Corporate Affairs website. You can very well check that as well on your own. It is publicly available. Okay. Now, along with the application, also applicant has to attach photo proof. This is not important. Okay. Only form number is important. DIR 3 has to be filed by the by the director, who is going to be director. That person has to file DIR 3. So you have to remember the form number as well. These points are not important, right? Okay. Now, before moving to the 11th question, we have 11th question. We have more questions, but before moving to the 11th question, let me talk about this ultimate SEBI Grade A test series that we have for you, and it is for phase 1 and phase 2 as well. Now, just like we are practicing so many MCQs, you have to practice more MCQs on your own as well. So for that, you require the test series. So for that, what you can do, you can go to the EduTap's website and you can check out this test series. And in this test series, you are going to get 12,000 plus MCQs. So MCQs are very important for practice, so that you are basically ready for your exam, right? So retaining the concept and applying them actually in the questions are two different things, right? Having knowledge and applying that knowledge, the application part of it, these are two different things. So you have to practice for both. You have studied till now, but you have to practice more and more MCQs. Now, in this test series, you are going to have chapter-wise test and solved PYQs for each chapters and overall PYQs as well, current affairs test. You will get full-length mock test for phase 1 and as well as full-length mock test for the phase 2, right? So I'll just show you briefly how you can find that in the website. Then we will move ahead with the 11th question. So in the Google, what you can do, you can type EduTap and you will be directed to this website, edutap.co.in, right? Now, inside the courses, select SEBI Grade A courses journalist, click on it. You will be redirected to the SEBI Grade A page. Scroll down and you can see here you have the test series for the phase 2 and you also have the test series for the phase 1 plus phase 2. So according to your requirement, you can choose any test series. So if you want to practice for phase 1 and phase 2, you should be going with this test series. Otherwise, you can go with this test series, right? Now the coupon code you can apply is SEBI 55. You have right now the price of 9,000. So you will apply the coupon code of SEBI 55 and you will get the flat 55% off, right? And then you can purchase it, right? Okay. And again, for the phase 2, you have the price, written price as 8,000, but you are going to apply the coupon code in this as well, so that you have the maximum discount possible right now. And if you want to check the further discounts, you can join the Telegram channel, in which you will get the regular updates about this coupon code or discounts, right? Chalo. Let's, yeah, now Nani Best is saying Save 70 is not working. Yeah, now because that coupon code is not valid now, because now the coupon code is SEBI 55. So till yesterday, you could have applied the coupon code of SEBI 70, isn't it? So you were getting the 70% flat discount off, but now it is not there because you have basically didn't apply for it yesterday. So whoever has got the test series yesterday, they got it at less price. But don't worry, this is also the affordable price. You will apply SEBI 55 and you are going to have the SEBI 55% off now, flat off. Okay. Chalo, let's move to the next question of the day, and it's the 11th question that says about the board of the company get its powers through special resolution. Okay, so board of the company is getting its powers, right, from special resolution. They are getting the power. What type of power they are getting? To appoint which of the following director. So generally, you know this thing, key directors are appointed by whom? They are appointed by the members or shareholders in the general meeting, annual general meeting, most of the time. But if board of the directors have been given the power through special resolution, then they can appoint which type of directors? Additional director or alternate director, nominee director, any of the above. Let me check the chart section, and yes, okay, that's good. Good. So I think most of you are correct, few of you are incorrect, but most of you are correct. That is alternate director. Not everyone is correct, but don't worry, we will read about this. Let's read out the explanation of this question. The answer would be alternate director. And now, appointment of alternate director, the company may authorize board of directors through article of association, that is AOA. I have told you two important documents, MOA and AOA. So either the board of directors have given the authorization from the article of association itself, or through passing of the special resolution by the members. They have now the authority to appoint what? To appoint the alternate director, right? Now, this alternate director shall not hold office for a period longer than the permissible to the director in whose place he has been appointed. So before getting into this point, let's first try to understand what is this alternate director actually. So what happens now in a company when we have a regular director, right? And he is absent from India for a minimum time period of 3 months. Please remember this data as well. This is also very important. This 3 months. So if he is absent from India for at least 3 months, 3 months or more, then only in his place an alternate director can be appointed. Okay, this was about the definition. Now, the alternate director which the board of directors have appointed is not going to hold office for a period longer than that is permissible to the director in whose place this alternate director is basically appointed. I'll give you the example for this. Suppose the regular director we have, and his tenure is expiring on today is 1st of April, suppose, and his tenure is expiring on 1st of May. Let's take the example. The tenure of the regular director is expiring on 1st of May. Now, he is going to be absent for at least 3 months from the India, right? He is going to be absent for the three months from the India. Now it is sure. So alternate director can be appointed by the board of director. Now the alternate director that has been come in place of this director, he can't hold the office more than 1st of May because the original director's tenure is ending on 1st of May. So how can alternate director can hold office more than that? So this is what written here, right? And alternate director also shall vacate the office when the regular director in whose place he has been appointed returns to the India. That is very logical, right? Nothing to remember here. Okay, easy enough. Now, a person who has been imprisoned for 7 years or more cannot be appointed director till completion of dash years from the expiry of sentence. So now basically, again, the appointment of director chapter is talking about the director's appointment as director's appointment eligibility. Now it says if the person has been convicted and imprisoned for 7 years or more, how many years should be have been passed after this completion of 7 years of conviction so that he can be appointed? 5 years, 7 years, 10 years, none of the above. And let me tell you this is a trick question. So just give the answer by understanding the question very carefully. And yes, no one is correct as expected. I have told you this was a trick question. Yeah, one person has given me the correct answer, but I'll not say the name. So a person who has been imprisoned for 7 years or more cannot be appointed director till completion of dash year from the date of expiry sentence. So the answer is none of the above. And only one person has given me the correct answer. Right? See what happens. I'll just explain you through the provisions, then you will have the understanding why the option is option number D. Let's look at the disqualification first of all. Disqualification for the appointment director. So a person shall not be eligible for appointment as director when, if he is of unsound mind. So first condition is that if he is of unsound mind and stands so declared by the competent court, right? Second point is he is an undischarged insolvent. So basically he was insolvent, but still he is not discharged from it, right? He is undischarged insolvent. Insolvent means he don't have any money, right? And still he is undischarged. He has the tag of insolvent. C point, he has applied to the educated as then insolvent, but his application is pending. Again, his application is pending, so he can't be appointed as the director of the company. Now understand the fourth point very carefully. He has been convicted by the court of any offense and has been sentenced to imprisonment for not less than 6 months but less than 7 years. So if he has been if he has been sentenced to imprisonment for 6 months and to less than 7 years, then only he would be appointed after the expiry of 5 years from this conviction. After the expiry of 5 years from this conviction, whose tenure should be and must be in between 6 months to less than 7 years. But suppose this person has been convicted 7 years, he has been imprisoned for more than 7 years or 7 years, then he is disqualified to get appointed as the director. He is not eligible to be appointed as the director of the company. So the question says, if the person has been imprisoned for 7 years, right? Now you got the understanding why the answer is none of the above. Okay, that's why I have told you in the beginning itself, this is the trick question. Otherwise, answer should have been 5 years in case he has been imprisoned for 6 months to 7 years, less than 7 years then, right? Okay, now okay, this we have done, right? In case of a company, what is the 13th question? What is the maximum number of days that can be there between 2 consecutive board meetings, assuming no exceptional cases? Now you have to tell me the answer of this question. Let me check the chart section. Should it be a 90 days, 120 days, 180 days, or 240 days? You tell me the answer. What should be the answer here? I'm still waiting. So what would be the gap between, what could be the maximum number of gap between 2 consecutive board meetings, right? Okay, I have started to get the answers, and yes, everyone is correct here. That is 120 days. So maximum gap could be 120 days. That's really good. Okay, correct. Everyone is correct here. Okay, not everyone. 1 or 2 guys are incorrect, but don't worry about that. Okay, so the gap should be 120 days. Now, meeting of board and its powers and number of meeting. Let's talk about this in detail. So every company shall hold the first meeting of the board within 30 days. Okay, this is the first clause that you have to remember. This can be asked directly in the examination. So every company is going to hold the first board of directors meeting within 30 days, right? But after this first meeting, each year minimum number of meetings should be 4. But these meetings should be in such a way that not more than 120 days should be there between 2 consecutive meetings. So not more than 120 days shall intervene between 2 consecutive meetings, right? So around 4 months you can say, but in the from the law's point of view, you will have to keep in your mind it is 120 days, not the 4 months, because there might be a difference. There might be difference between 4 months and 120 days, right? But from the practice point of view, I'm just talking about 4 months. But exact answer is 120 days, right? Now, for the example point of view, I'll give you the example. Suppose the first meeting of BOD is held on 1st of April. Then what would be the last date of second meeting? So it could be around 29th of July, because April, May, June and July. So 120 days, maximum gap could be 120 days. So you can't have the gap of 121 days. Okay, so within these 120 days, you have to conduct another board meeting. So it could be asked from you ki how many meeting should be conducted. So answer should be 4, and gap could be asked from you, and that you will give the answer as 120, right? Let's move to the 14th question of the day. That says, okay, just a minute, I have a call, I guess. Okay, chalo, let's move ahead. The draft minutes of the meeting, which is done electronically, shall be circulated among all the directors within dash days of the meeting, either in writing or in electronic mode. Now see what happens, what this question is talking about. First of all, understand the question. Question is talking about ki sometimes what you can do, you can circulate the minutes of the meeting. You can circulate the minutes of the meeting electronically, which is done electronically. You have to circulate that to all the directors, right? But question is asking you within how many days you have to do that, and you can do that in writing or in the electronic mode, by the email or through post. That is the company's point of view, but within how many days you have to do that, that is the question is asking to you, if the meeting is being held electronically. Then so I have started to get the answers, 10, 15, 30 or 60. So yes, now in this question everyone is correct, that is 15 days. So within 15 days, okay, I'm really glad to see this. In this question everyone is correct, no one is incorrect here. So 15 days, within 15 days they should be circulating the minutes of the meeting. Very good. Okay, so procedure for meeting through audio visual means. So you know ki meetings could be held through the audio visual means as well, but whatever are the minutes of the meeting, that should be circulated among all the directors within 15 days, right? Now one more important point is here that you must remember is that ki whoever has attended this meeting, every director who has attended this meeting, whether through personally or through electronic mode, should be confirming about the accuracy of the minutes of the meeting within 7 days. Now this also you have to remember, within 7 days all the directors who have participated in the meeting, they should be giving their approval. And if they don't give their approval, and suppose they don't raise any objection as well within these 7 days, then it will be assumed to be approved from their part. So it will be assumed to be as approved, right? Okay, now at this point you have to remember, and this point you have to remember in this question. Next question. Okay, wait for a minute, my PPT is hanging or what? Just wait for a minute. Yeah, in this 15th question of the day. Yeah, now okay, now it's fine. Let me activate the pen. Yeah, in case of an OPC, if more than one director is there, they can comply with provisions of section 173 by just, what is this 173? 173, we have discussed about this 173, that is about the board meetings, right? So it says, next question says, why this? Okay, now it is working. Yeah, I think in the previous slide there is some error. Whenever I just click on next arrow, it doesn't move ahead. Okay, so the question says, in case of an OPC, if more than one director is there, they can comply with the provision of 173 section by just having at least one meeting of the board of directors conducted in each half year of the calendar year, and the gap between two meetings should not be less than what? How many days? So basically it is talking about some exemptions given to the OPC. So in the case of normal scenario, you know, the gap should not be more than 120 days. But in case of OPC, The gap should not be less than. Please understand this point, huh? In the case of OPC, I am asking you, gap should not be less than how many days? Because in the case of OPC, if suppose there is one director, then you don't have to conduct any board meeting, right? But if more than one director is there, then you have to conduct the meeting. So for OPC, certain exemptions has been given, has been provided. So it says you can conduct only 2 meetings in each half year, but the gap between these 2 meetings should not be less than 20 days, 120 days, 90 days, 120 days, 150 days, or 180 days. So first let me check the chat section, then I'll give you the answer. Okay, now everyone is correct in this question. Yes, 15th question, everyone is correct. That is 90 days. So please remember, in case of OPC, not less than 90 days is given to you. But in case of normal scenarios, as per 173, the gap should not be more than 120 days. See, understand the difference, right? Okay, so this we have talked about in detail, right? This is what we talked about. Okay, now next question. Next question. Question number 16 says, a company is a Section 8 company. So again, certain exemptions have been provided to Section 8 companies as compared to the normal companies, right? So it says Section 8 companies has 4 directors. What shall be the minimum number of directors present in meeting that constitute a quorum in this case? So first of all, understand what is quorum. So quorum is the minimum number of directors that are required for the meeting, that we call quorum. But in the normal case scenario, we will study what is the quorum. But for the Section 8 companies, there is some exemption. And it question says ki this Section 8 company has 4 directors. And you should be telling me what is the minimum number of directors in case of Section 8 company. So let me check the chat section. Then I will discuss the answer with all of you. Okay, so not everyone, but yeah, most of you are correct. That is 2. Most of you are correct here, but not everyone is correct. Okay, don't worry if you don't know this. Let's discuss this. Then you will have the clarity ki why the answer is not 1, 3 or 4. Okay, I can understand why you are incorrect. Okay, let's discuss the explanation of this question. First of all, with the normal companies. Okay, so quorum for the meetings of board is discussed in 174 section, right? Now it says quorum for a meeting of the board shall of the board of directors of a company shall be what? 1/3 of its total strength, or 2 directors, whichever is higher. Okay? Understand? This is the normal case scenario. I am talking about normal case scenario, not the Section 8 companies. First, we will discuss all the additional point. Na? We have to make sure that we know all about this provision and about this subsection 1. Okay? So we are also studying the additional point because question could be asked from anywhere. So it is the normal case scenario that 1/3 of total strength or 2 director, whichever is higher. Just like in the case of independent directors we have seen, right? Now this total strength for which we are calculating 1/3, it is not going to include the directors whose places are vacant. Okay? So the vacant positions we are not going to include in our total strength. Okay. Now exception is given to Section 8 company, and the question was asking about Section 8 only, right? So it says the quorum for a meeting of the board of directors of a company shall be 8 members, or it is 8 members, or 25% of its total strength, whichever is less. See, understand, 8 members or 25%, whichever is less. But one more point is written here. Can you see this? Subject to that, it should not be less than 2. So this is the minimum number of directors that are required, right? So it can't go, it should not be less than 2. Okay? Now in the question, what do we have? Section 8 company, we have 4 directors. When you try to calculate 25% of it, what is that? That is 1. Okay? That is 1. So this is what we are talking about now, 25%, right? Or 8. So obviously from 25 and 8, less is 25%. So 1 is there, but subject to the minimum of 2. So it can't go below 2. It should be minimum of 2 directors for the quorum. Obviously, yeah, that is very logical enough. Can't you see this? Ki how can the company be held without even at least 2 directors, right? So the minimum is 2, right? And see, even in the case of normal scenario, it is also minimum of, it is not minimum of 2, but what is the higher of these 3? In the case of normal companies, you will take the higher amount, not the 2 directors. But in case of section company, you will take minimum of 2. Understood? Okay. Now, 17th question. A company being not a section 8 company has total 12 directors. Out of this, 9 are interested directors. Now, see, understand this question very carefully. Achha, this question we have done. No, we haven't done this question. So again, section 8 companies and total strength is 12 directors. Out of this, 9 are interested directors. What are these interested directors? Interested directors are those directors which are interested in any contract with some other corporate or with some other company. Those are interested directors. Okay, so out of 12 directors, these 9 directors are interested in some other company as well. That means they have interest in some other companies or shares in some other companies. In this case, what shall be the minimum number of non-interested directors present in the meeting to constitute a quorum? Very important question. Okay? So quorum should be having, in this case, 3 non-interested directors, 8 interested directors. Okay, this will be eliminated obviously, right? Because question is asking what shall be minimum number of non-interested directors present in the quorum of the meeting. So option number B, you can eliminate even if you don't know the answer, right? Okay, 2 non-interested directors, and the option is 12 directors in total, irrespective of whether they are interested or not. So this also you can eliminate. So let me check the chat section who all of you are correct here. Oh, nobody has given me the answer yet. Acha, given me. Okay. Someone has given me the answer. Okay, yeah. Very good. Okay, very good. Everyone is correct. Whoever has given me the answer. Only I think less number of people know this answer. That is option number C. 2 non-interested directors must be there. Now let's talk about the detail of the underlying provision. Then you will have the understanding why the answer is 2. Okay. Now, quorum of the meeting. Now understand this very carefully because it can be asked directly. In case the interested directors are equal to or greater than 2 by 3rd. 2 by 3rd is how much? 66.66%, isn't it? So if the total number of interested directors are greater than or equal to 2 by 3rd of the total strength, then quorum shall be minimum of 2 directors who are non-interested directors. Got the answer? And in this case, out of 12 directors, what will be 2 by 3rd? The 2 by 3rd will be 8 directors, isn't it? And now in this company, the provision says if more than 8 directors, see, equal to or more than 8 directors, according to this company, if they are what? Interested directors, then the quorum should be of at least 2 non-interested directors. That's why the answer is option number C. Now you have got the clarity why the answer is 2. Okay, clear everyone? So you have to remember each and every provision. In the company law, you don't have any choice. What is written, you have to remember it, right? Okay. Next question, question number 18th. If dash or more of the total number of directors of the company think that any resolution under circulation must be decided at a meeting, the chairperson shall put the resolution to be decided at the meeting. So what the question is asking, first try to understand the question. See, it is saying to you, it might happen that company wants to pass a resolution and it can do so with the help of circulation as well. It can circulate the resolution and it can get the acceptance from the directors and it can pass it. It is also the procedure. It is included in the procedure. But the question is saying to you, if suppose some directors think that this resolution should be passed only at the meeting, then what will be that minimum number? So if 1 by 2 or more total number of directors says so, or 1 by 3rd, or 1 by 4, or 1 by 5, what would be the answer? I have explained you the question. Now you have to give me the answer 1 by 2, 1 by 3rd, 1 by 4, 1 by 5. So let me check the chat section, and no one has given me the answer yet, and the answer is option number B, that is 1 by 3rd. Okay, no one is correct here, so the answer would be 1 by 3rd. Okay, so again, in-depth question, I know, but what to do? If in the phase 2 it would be asked, you have to remember all the provisions. Okay, let's discuss about the underlying provision of this thing. So to pass a resolution, circulation can be followed, right? But if resolution is getting passed through circulation, certain conditions must be met, and those conditions include your what? First condition is that the resolution has been circulated to all the directors, right, or members of the committee at their address, registered either by post or through email as well. They have to pass it, but the important point is that the resolution should be circulated to all the directors, right? Now second point is important. Obviously this is very logical, it must be approved. So for to pass any resolution, obviously it must be approved by the majority of the directors who are entitled to vote on the resolution. That is, simple majority is needed to pass any resolution, right? Even to pass the bill in the parliament, we need a simple majority, right? Okay, certain kind of bills, not every bill. Okay, now third is important, very important. It says if 33.33% of the total number of directors of the company, they object to this resolution. Basically they are not objecting it, they are only saying that this resolution that is under circulation, that must be decided in the meeting only, not through circulation, right? So then in this case, if 33.33% or 1 by 3rd of the directors says so, then chairperson is going to put this resolution, and that is going to be decided at the meeting of the board only. So therefore the option number B was the correct answer, that is 1 by 3rd. Correct everyone? Clear? Let's move ahead with the 19th question. Who among the below shall mandatorily constitute the audit committee? Every unlisted company on the verge of getting listed, every private company, every unlisted company with a paid up capital of 5 crores, every unlisted company with a turnover of 100 crores. So it is not a very difficult question, because I am assuming you all must be knowing the figures that are required for any unlisted company to constitute the audit committee. I am hoping that. Let's see who all of you are correct. Let me check the chat section for the 19th question. And yes, now in this question, I'm really now satisfied. Okay, in this question, everyone is correct. Yeah, okay. Everyone is correct here. Every unlisted company with a turnover of rupees 100 crores. So we have certain other limits as well. Let's discuss about that. So every listed company requires to constitute the audit committee, that we know. But in case the company is non-listed, then as per the latest financial statement, if the paid up share capital is equal to or greater than 10 crores, and then if the outstanding loan, or it is or, not and, if the paid up share capital is more than or equal to 10 crores, or outstanding loans, debentures and deposits is greater than or equal to 50 crores, or turnover is greater than or equal to 100 crores. So if any of the condition is satisfied here, that non-listed public company or unlisted public company is going to constitute the audit committee. So you should remember all these three figures. So how you will remember it? Just write 10, 50 and 100. So this is for paid up share capital, this is for loans, and 100 crore capital is 100 crore is for turnover. Right? Just remember it like this. Clear everyone? Okay. So let's move ahead with our 20th question of the day, that says permission to donate to charitable funds is required in general meeting when aggregate amount of donation in a financial year which exceeds dash of its average net profits for three immediately preceding financial year. So basically the question is saying कि when you are donating something to the charitable funds, right? But if you are exceeding some particular amount, if you are exceeding some particular amount, then you have to take the permission in the general meeting. So what is that percentage of amount? And this percentage is of average fixed net profits for the preceding immediately 3 financial years. So it should not exceed what? 3%, 5%, 8% or 10%. You tell me the answer. What should be the answer here? Right. Okay. So I have started to get the answers, and yes, again everyone is correct here. Whoever has given me the answer, everyone is correct. That is 5%. Good. Now, see, it is not, question is not saying to you ki if you have if basically if you are exceeding your average net profit of if you are exceeding 5% of the net profit of the average net profit of the 3 preceding financial year, you can't do the charity. Question is not saying that. You can do the charity, but it must be approved in the general meeting. Only this is what this question is asking to you, right? So board of directors of a company can themselves contribute bona fide charitable fund. Bona fide means in the law term we call it, in the general term we call it in good faith. In good faith, right? Bona fide means with good intentions. In the law we call it bona fide. So they can contribute to charitable or other funds, but if the aggregate amount in a particular financial year is exceeding 5% of the net profits in the 3 preceding financial year of the average of net profits, then they have to take the prior permission to the permission in the company's general meeting. Correct? So you have to remember this clause. Now, next question. The details of investment of a company in shares in which company's beneficial owner. Oh, so what do we mean by beneficial owner? See, what happens whenever you have the demat, whenever you have the shares in demat account. So registered owner is the depository basically, and the company is the beneficial owner, right? So the question is asking you about the same thing. If the details of the investment of a company in shares in which company is beneficial owner means the rights and the financial benefits will belong to the company only, but only the legal owner is depository because it is with the depository. That's why needs to be maintained in register. So you have to maintain the register for that. What all shares you have in the demat format in which you are the beneficiary owner, right? You have to maintain that in the register. But the format of that register should be in which form? MBP1, MBP2, MBP3, MBP4. So let me check the chat section, and yes, few of you have given me the answer, but no one has given me the correct answer. That is MBP3. Okay, I think you are guessing it. That's why, yeah, no one has given me the correct answer. Yeah, okay, I'm sure no one has given me the answer. Okay, so MBP3 is the correct answer. That is option number C. You have to remember this form number only, right? Now, can anyone tell me why the form number name is given as MBP? Can anyone tell me this thing? See, I have told you in the beginning, in the previous class, I guess, why the name has been given as PAS2, PAS3, because it signifies prospectus and allotment of securities. Now I am asking you, why this MBP? Can anyone tell me? See, everything has to do with the logic, na? There is nothing in the company law which is illogical. Obviously, the committee who is making the law, they have some logic to, they have some basis to give the name to these forms like MBP, PAS. So what is the logic? No one has given. Yeah, now I have got the answers. Meeting of boards and its powers, because this question belongs to the this chapter, that is meeting of board and its powers. That's why the name is MBP. So when you know the logic, na, you don't have to remember even the names. So then you will know, okay, which chapter this belongs to and what will be the naming of this form MBP, right? Though you have to remember this number, that is MBP3. Okay, very good, Vipin. Okay, now this question is yeah, I have already explained this question to you. So you have to basically enter this or maintain these details in the register, and the format used should be MBP3, right? Let's move to the 22nd question that says NCLT was set up as a result of which committee? Not a very important question. Not very important question, because in the company law you would not, most probably would not be asked any committee. But we have the question. Let's discuss that as well. This NCLT was set up as a result of which committee? Justice V. Balakrishnan Iradi Committee, Injeti Srinivas Committee, Tapan Ray Committee, M. Ganguly Committee. It is easy, and yes, I have got the correct answer. That is Justice V. Balakrishnan Iradi Committee. Yeah, everyone is correct here. Okay, that's good. So nothing to explain here, no logic here. You just have to remember the committee's name, right? V. Balakrishna. Okay. Now, apart from this NCLT, we also have this NCLAT, that is National Company Law Appellate Tribunal. So these are basically quasi-judicial bodies. Okay? They are judicial bodies, but quasi. Quasi means their scope is limited. They can't decide on each and every aspect. They have some limited scope. So like NCLT and NCLAT decides the company matters. So to resolve the company matters quickly, these has been formed, right? And this has been basically set up as the result of Iradi committee. They have suggested this NCLT, right? Now, which of the following is the minimum qualification for a person to be appointed as the president of NCLT? What should be the minimum qualification? Minimum, not the maximum and not the any other qualification, but minimum qualification. Judge of High Court of 10, he should be judge of High Court, not High Court, but District Court for 10 years. First option says. Second option says judge of High Court for a minimum of 5 years. Judge of High Court of 10 years, and either one or two. So you might be confused between two options, but I know what is written in the provision. You have to give me that answer. Okay? What is written in the provision? So let me check the chat section, then I'll give you the answer. And yes, not everyone, but few of you are correct in this as well. Not everyone is correct here. Yeah, B is the correct option, I guess. Yeah, but not everyone is correct here. See, High Court judge we are talking about. If someone has been in the High Court for 5 years, then he can be appointed as the president of NCLT, right? If he has been a judge of a district court for 10 years, he is not allowed, right? Okay, so that will be 23rd. B will be answer, not D. Everyone, not D. B. Everyone is telling me D. Why you are telling me D? District court judge is not allowed to be as the president of NCLT, right? ठीक है, चलो. Answer is B. Okay, now look at this. A person who is or has been a judge of a high court for 5 years, for the president post we are talking about, right? Okay. Okay, now this is the homework question you have to give me. I'm not going to tell you the answer here. This is on your own, but do let me know in the comment section what should be the answer for this particular question. I will just let you know if you are correct or not, or you will obviously know by yourself. Most of the answers which will be matching in the comment section, that will be correct, right? So that will that way you will know by yourself. But I am not going to give you the answer of this question. Principal bench of NCLT is in where? Mumbai, New Delhi, Kolkata, or Chennai? Someone knows this? Okay, I have got the answers. Okay, but I am not going to tell the everyone ki is this answer correct or not. You have to give me the answer in the comment section, then I'll tell you. Not in the chat section, in the comment section. NCLT, again a homework question, 2 homework questions, 24 and 25th. NCLT can amend its order with dash years. Important, huh? Very important question, but very easy as well. So whenever NCLT has decided on whenever NCLT has given a judgment on some aspect, and if it has not been appealed to the NCLAT, to the appellate tribunal, it has not been appealed against the order, people has not appealed against the order of the NCLT, then NCLT can amend its order within how many years? 1, 2, 3 or 4? Again, this is the homework question. I am not going to tell you if you are correct or not. Nilesh, in question 23, C was also correct, but that's why I have told you in 23. You have to tell me what is written in the provision. Yeah, Nilesh, that's good observation. That's why I have told in the beginning itself in the question. You have to tell me the answer what is written in the provision. So most appropriate when you talk about that will be B only, right, Nilesh? Okay. So this answer, I have got the answers for this question as well. but I'm not going to tell you if you are correct or not. I will tell you in the comment section after the video is over. You have to give me the answer in the comment section. ठीक है? चलो. That's all. And so we have almost done 50 questions. Today 25, and yesterday also we have done the 25 questions together with all the additional points in the underlying provisions, right? So again we are going to discuss 25 more questions tomorrow, and day after tomorrow also we have a class. Then we will be done with the Companies Law 100 most important questions. ठीक है? 2 more classes for Companies Act, and that will be important as well. Okay, welcome everyone. My pleasure. And it's really good to see the participation from all of your from all of you, and it's really makes me happy when I see ki people are giving me right answers, because that's what a teacher wants, right? Ki when you all give the right answers, it just feels like ki you are studying hard, you are studying smartly, or whatever you are doing, but you are practicing enough for the examination, right? Okay, welcome Suvanshi, Unfiltered, and Nilesh. Okay, so that's all. And if you want to basically look at the strategy of toppers, what you can do, you can go to the website again, and here you will find free materials. So inside this you have the blog section. Just click on it and you can read the blogs. Choose first of all the category of SEBI Grade A, then you will have the different blogs for the SEBI Grade A category, and you can read whatever blogs we have for you to understand the strategy for the interview preparation and all. And for the PDF of this session, what you need to do, just scroll down in this page only, and you will find here the join now button. Just join the Telegram channel. I think you will get the PDF of this particular session tomorrow only. You don't have to wait much. Tomorrow only you will get the PDF of this. And yesterday's class, what we have discussed in the yesterday's class, that PDF has already been provided to you, I guess, in the Telegram channel, right? Okay. And tell me in the chat section ki if you are preparing other subjects or not on your own. So we are practicing MCQs, other subjects, how the preparations are going on for other subjects. For that we will take, I think, okay, chalo, we will talk about that in tomorrow's session in the beginning itself. Okay, okay. So we will meet tomorrow, and we will have again 25 more questions, right? Chalo. Take care everyone, all the best for the exams, and do your best. And I'm going to end this meeting, right? End this class.